Hi, I'll be honest, I trade primarily futures these days, but whenever I start seeing a particular stock all over my feed, I still like to at least take a look and see if it's actually worth paying attention to. And that brings us to today's video. We're going to be talking about High Roller Technologies, stock ticker ROLR. This one popped up on the trending list over on StockTwits, which caught my attention, so I decided to dig a little deeper. And honestly, the name kind of fits. At the time of recording this video, High Roller Technologies is up over 700% year to date. This thing started the year around $2, and by January 14th, it had already tagged a 52-week high near $33. That's a wild move. So what is this company, what do they do, and what is the hype?
Welcome to the high-stakes world of High Roller, where class meets adrenaline. Think black tux, crisp martini, and the thrill of the game. From legendary slots to live dealers, the experience is nothing short of elite. Play for real or just for fun. Your move, your moment. Ready to roll? Join now at highroller.com. It only takes a minute.
Well, no surprises here. At its core, High Roller is an online casino betting company operating primarily in Europe and other international markets. As of mid-January 2026, ROLR had a market cap of roughly $140 million. They offer the usual lineup of online casino games, blackjack, roulette, baccarat, poker slots, all under the highroller.com brand. They also operate Fruta.com, another online casino platform, and they generate some revenue through internet-related advertising as well. The company was founded back in 2005 and is based out of Las Vegas, Nevada. They went public fairly recently, IPOing on October 23rd, 2024. Now here's where things start to get a little interesting. When I typed in highroller.com, instead of landing on a live casino, I was redirected to a simple launch page saying the site is coming soon. And when I checked out Fruta.com, I got another message saying the platform isn't supported in my region, which is kind of ironic since I live in Las Vegas. So naturally, that raises the question. If most people can't even access the product, at least not in the US that is, why was everyone suddenly obsessed with this stock? And is it really about the business? Is it a short squeeze? Or is it just the ticker being completely meme-worthy? Well, to find out, we head over to ir.highroller.com. And if you don't know, IR stands for Investor Relations. Now, the stock had its first major pop on January 8th and January 9th, and this was likely caused from a couple news releases posted on January 8th, wherein High Roller Technologies plans sports betting expansion, inks letter of intent with Altenar to power fully managed B2B sportsbook platform. In this news drop, Seth Young, the CEO of High Roller, states, "The addition of Sportsbook to our product suite through Altenar offers us the opportunity to rapidly expand High Roller's market position. Altenar's platform, risk management services, and 24/7 support model align with our goal to deliver a reliable and scalable user experience as we pursue the regulatory pathways and technical milestones required for launch." Now, I know these PR reports can be a bit of a drag, but you need to be aware of the fine print before you go and buy a stock based on a headline. At the time news dropped, it wasn't a finalized deal. It's a non-binding letter of intent with Altenar software, where Altenar would essentially supply High Roller with a fully managed sports betting software platform for its licensed sites. Nonetheless, the stock continued momentum through January 9th when it was announced that Saratoga Casino Holdings makes strategic investment in High Roller Technologies. How much money, you ask? Well, according to the report, Saratoga made a $1 million strategic investment in High Roller through a private placement of restricted common shares at a purchase price of $2.80 per share. And this is something worth keeping in mind. A sophisticated investor company was willing to come in at $2.80, which gives us at least a rough reference point for valuation. Now, to be clear, that doesn't mean the stock should trade there. It simply tells us what one party was willing to pay at the time. And for Saratoga specifically, this was a meaningful move because it marked their first entry into the online gaming sector. Saratoga's CEO Samuel Goretti was quoted as saying, "High Roller's growth trajectory is extremely compelling, and we are thrilled to support the company with this strategic investment." The deal was expected to close on January 12th, 2026, pending the usual conditions. Now, what's interesting is the timing. Just 2 days later, on January 14th, the company dropped a press release, and that's when the stock went parabolic. So capital comes in, deal wraps up, and then the news hits. I'll let you draw your own conclusions because they dropped a headline that really grabbed attention.
Well, life all comes down to a few moments. This is one of them.
ROLR Technologies partners with Crypto.com to enter the rapidly growing predictions market space. This was major news because it was a binding letter of intent with Crypto.com, Derivatives North America, or CDNA, for an exclusive partnership to launch an event-based predictions market product in the United States of America. The partnership will offer people the opportunity to trade contracts across markets, including finance, entertainment, and sports, through a legal, engaging, and user-friendly platform. Again, Seth Young, CEO at ROLR, is quoted as saying, "Pairing the massive appeal of prediction markets with our strong distribution capabilities is an incredibly exciting opportunity, and we're looking forward to introducing our premium experience to consumers across the country." It's important to note that despite the binding letter of intent, this partnership also isn't finalized yet. The companies still need to sign definitive agreements, which will include all the usual conditions. There's no guarantee the deal will actually close. That said, if everything goes according to plan, they're aiming for a Q1 2026 launch, with Crypto.com serving as the exclusive provider of prediction contracts across ROLR's distribution channels. The news didn't stop there. On January 15th, they dropped this piece of news. ROLR Technologies and Power Protocol partner to introduce Web3-enabled incentive-driven engagement. The initiative is designed to explore how incentive-based experiences can be scaled responsibly to boost engagement and open new revenue opportunities in regulated digital entertainment markets. Essentially, this collaboration combines ROLR's growing online gaming reach with Power Protocol's incentive platform to see how mission-based rewards, behavioral nudges, and co-created user experiences can be integrated into consumer products, again, all reasonably, of course. Or to put it bluntly, it's basically a partnership to responsibly hook you on prediction market trading. Now, speaking of addictions, it was also announced on January 15th that ROLR Technologies plans strategic marketing partnership with Lines.com to accelerate U.S. prediction markets launch, and they signed a letter of intent. Now, this one notifies us that they have signed a non-binding letter of intent with Lines.com, and the goal of the partnership is to bring ROLR's prediction market offerings to an audience that already gets implied probability, odds-based decision-making, and event-driven trading dynamics. And as always, a quick reminder, this is still non-binding. Unless a definitive agreement is signed, the relationship is subject to negotiations and the usual conditions. All right, so what's the takeaway here? All of this PR has definitely put ROLR in the spotlight, but will the winning streak continue? Is this a stock you should go all in on? First, it's worth noting that the hype has cooled off a bit. On Friday, January 16th, ROLR dropped nearly 30% as more news came out. So if you're thinking about investing, be prepared for a roller coaster ride full of volatility. If that doesn't scare you yet, let's dive into the financials, but don't worry, I'm not going to get too deep. I'm going to start with the cash flow because this tells us how the actual business is doing, not just what looks good on paper. Operating cash flow here is still negative. ROLR is not consistently generating cash from its core operations yet. They've reported losses, and once you adjust for non-cash items like depreciation, more cash is going out than coming in. This is, however, not unusual for a company at this stage. They're still scaling the platform, expanding into new markets, and building out their tech. But it does mean investors need to keep an eye on how long that cash burn continues. Now let's move into investing cash flow. This is where the company is spending money on things like capitalized software, development, equipment. In other words, they're reinvesting back into the platform, building tech, improving infrastructure, positioning themselves for future growth. It doesn't look like money being wasted, it's money being deployed. Next up is financing cash flow, basically where the money is coming from. There were some small financing activities like modest debt or repayments, but nothing that meaningful offsets the losses. The key takeaway here is that ROLR isn't aggressively leaning on new financing quarter after quarter, at least not yet. Now let's zoom out and take a look at the balance sheet, which is just a snapshot of the company's financial position at a moment in time. On the asset side, ROLR has roughly $16 million in total assets. Cash has come down compared to last year, and some of that cash is restricted, meaning it can't be freely used. A large portion of the assets are intangible, mainly software, platform technology, and IP. There's also a deferred tax asset, which only becomes valuable if the company eventually turns consistently profitable. This isn't a red flag by itself. Again, we're looking at a tech company. The value isn't in factories or inventory, it's in the platform. On the liability side, total liabilities sit just under $10 million, and they've actually declined slightly year over year. That matters. When liabilities are shrinking while assets stay relatively stable, that's generally a positive signal. As for equity, stockholders hold about $6.5 million and it's ticked up slightly. So what's the big picture here? Assets are relatively stable, cash is trending down, liabilities are manageable and even improving, and the company is not consistently cash flow positive yet. High Roller is clearly still in building mode, investing, expanding, and trying to scale, and they're not yet sitting back and harvesting profits. So bottom line, if revenue growth accelerates and operating efficiency continues improving, this balance sheet is survivable and maybe even glorious one day. But if the cash continues to burn without meaningful growth, the company will likely need to raise capital, which means dilution becomes a real risk. All in all, this is a high risk, potentially high upside situation, and the next few quarters matter a lot. Now, for the fun part, should you buy the stock? Well, the chart has been extended and volatile, so short-term predictions are inherently challenging. These types of moves often create gaps that can act like magnets. The prices tend to revisit them later as part of normal trading action. Here are some key support zones to watch on the 10-minute chart, and it does look like it's broke potential support at $17.36. So the next zone could be headed towards anywhere from $16.91 to $12.50. If $12.50 breaks, then it could be a long drop to fill in the gap at $3.52. In terms of upside, well, personally, I think there's a good chance you'll be able to get this stock lower very soon unless more major news hits. But if I had to pin some upside targets, as of January 17th, I'd keep it tight to the top of the downward channel, which is currently at $22. Upside targets are also hard to identify because analyst coverage for High Roller is pretty thin right now. Some sites show a buy consensus with an $8 price target, which is much lower than what the stock is right now, but that's based on very few analysts. In a name this volatile and lightly covered, take analyst ratings with a grain of salt. They can help frame expectations, but they're not gospel. So that's High Roller in a nutshell. Parabolic moves, hype everywhere, and enough volatility to give you whiplash. Could it keep going up to a new all-time high? Sure. Could it dip back down to fill gaps? Also possible. Either way, buckle up. I'd love to hear your thoughts on this stock and your price targets if you're investing. If you enjoyed this video, go long on the like button and don't forget to subscribe. Thanks for watching. Remember to trade gingerly, and I'll see you in the next one.